Okay, good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. It is Thursday, February 4th. Good to be with you guys here. Hey, Jay, Pete, Steve, everyone in the room. Always a pleasure to see you guys. So, a couple of housekeeping updates real quick. For the next 3 weeks, we'll be running with a one webinar a week schedule here on SB. I will be doing a secondary webinar for IG Daily FX on Wednesday, it seems, just for the next 3 weeks, a secondary webinar to kind of follow off and piggyback off the Monday one. So I'll be alternating the webinar here on SB between Tuesdays and Thursdays, just to give you guys a little bit of a break, so it's not Monday, Tuesday, Wednesday in a row. But you'll still get me 3 days a week, and just wanted to keep you updated on that front. Okay, let's jump right in. For today, obviously, we got the NFPs on tap tomorrow. Hey, good morning, Jay, Pete. Got NFPs on tap tomorrow. We got a lot of things to cover. So setups on the DXY, Euro, Dollar Yen, Dollar Swiss, Gold, Crude, Dollar Peso, Aussie Dollar, Kiwi Dollar, SPX, Sterling, and a quick look at the Dollar CAD. Any other questions, trade setups, as always, guys, feel free to throw them on the message board. Let's jump right in. So first things first, here's what the DXY looked like early as we started the week. So we had set up a really nice range right below downslope resistance. Again, the weekly chart had us coming off of big support. Here's what it looks like. And the level I told you guys to focus on into the start of the week was 91.01. It's a 2017 swing low, really nice pivot in price here. So we did break through that. Next upside level of resistance for the DXY, a little more room until you run into this little consolidation slope here, but more so the lateral levels of significance is right here at the 2016 low, the 2018 open, major pivot in price. And again, that's 91.91 into 92.28. That's your key resistance as far as the weekly charts are concerned. Also note that the bullish invalidation level that we marked earlier in the week remains constant. For us to get straight bearish, mark resumption of the broader downtrend in dollar, you really would need to make it back below the yearly open. Objective level, it is the open for the year, 89.93. So from 1,000 feet up, the charts still are pretty clean as far as where we are in the broader trend. Here's DXY on the daily chart. And here's what it looked like earlier in the week. So again, focus was that 91 level to validate a break of the median line, right? Really nice action on the median line, support, break, acceleration, resistance. Here's the break, made it right on the first, right on Monday, plowed through. There's 91.01. Here's the 38.2 retracement at 91.32. This is a 38.2, the drop from the September highs. So just higher, I want you to focus on these levels right here. First of all, the 75% slope comes in basically just above today's highs. The bigger level for me is right here, 91.76 into 91.79. It's the September objective swing low. You can see that we've tested at support in the last couple of days of November here before shattering lower in December. It's also the 100% extension of the advance off the low. So even if this is some mean just a correction, 2 equal legs off the low takes you into 91.80, and we'd have to reassess the reaction that we get there. So not out of the woods yet. Still think there's a little bit more upside to go. Note that we are above 60 for the first time in RSI since September. So certainly the momentum starting to gather pace here. What does it look like on the intraday? Here's what I've been looking at. So no change to the slope that we presented on Monday. Again, here's what that looked like, or on Sunday rather. Here was the Sunday open. Broke 90.78. That was a Friday high I was telling you about. There's 91. Here's 91.32. Here's what we just did. Broke above, and we're right there again. Looking for reaction here today. Okay. If we slide back into this as the U.S. markets come into play, there's the potential for a little bit of a kickback. The median line doesn't come until 90.89, 90.90, right below that 91 level. So I do want to leave a little bit more room. If you look at the swing highs from earlier in the month, from January, somewhere in this range is where I'd want to see sort of the max thrust for the downside. But the next upside level 91.79. Now look at where 91.79 comes in line with this pitchfork that we've been following off the Jan lows. This is off the Jan December lows, actually. So really nice action on the 25% parallel, decent pivots along the median line, decent pivots along the 75% parallel. That's why I'm saying today, look for reaction here. If it holds, upper parallel takes you right into that 91.79 level. Get a little bit more defensive here, okay? Obviously, tomorrow is a employment Friday. We get non-farm payroll reports at 8:30 Eastern from not only the United States, but also Canada. So U.S. non-farm payrolls, guys, the revision continues to be revised, right? So now it's back up at 50,000. Recall that last month we got a negative clip of 140,000. And unemployment is all over the place. I've seen economists projecting 6.9. I've seen economists holding 6.7. The consensus at this point seems to be at a hold at 6.7. Obviously, as I always tell you guys, the focus will be on the broader labor market participation, right? We've heard this story starting to really surface that we have discouraged workers are deemed, quote unquote, I'm doing air quotes here, discouraged workers out of the workforce for, I don't know, is it 16 or 15 weeks or something, they get dropped out, right? So if the workforce participation is contracting, you know, that will put a downward, what do I want to say? It'll put an artificial downward thrust on the employment number. So we always want to keep in mind when we're looking at the unemployment, what was the change in labor force participation? Sorry to get into the weeds there, but something we'll be looking at tomorrow. And certainly the major event risk for the US as we head into the close of the week. Questions on DXY? All right, so let's go back to last night's update on Euro. And the focus for me, and on most of these setups, as I told you, heading into last night, a lot of them were testing some really critical levels, of which I thought I was going to get cute and play a little bit of a pullback in dollar yen off that high. You know, ate a small stop on this one with the break higher. Euro looks good if you're still in the swing trades there. Phenomenal. We're pretty close. Again, the break below 120 was the major level we talked about here. Here's Euro first on the weekly charts. So the 120 level for me is basically the focus for this weekly close. Recall again, this is a 618 extension from the 2017 and 2020 lows, major fib, 2018 objective yearly open, and the highs that we made back in August. Acceleration on the breakup. Here we are in the breakdown. Looking for reaction here today. A solid move and hold below 120 keeps the focus lower. It's plain and simple. Okay, really nice divergence in momentum into that high, the oscillator with the lower highs, the price makes a higher high. Again, remember, you're looking for price, not to validate a move in the oscillator. That's exactly what we saw. So risk for a little bit of a drawdown continued if we close below that 120 handle. Here's what Euro looks like first on the daily chart. Okay, interesting levels here. First thing I want to note is, excuse me, and this sort of goes in line with my justification or my thought process behind dollar yen yesterday. We've had a pretty considerable multiple day stretch to the upside in dollar yen, to the downside in Euro, way more apparent in dollar yen. But here's Euro with its fourth consecutive daily drop, okay? 5 drops in the last 7 days. So it's been pretty precipitous. From the daily chart, the only thing I want to highlight, again, is 120. Daily close below this, I really don't have anything worth of note until we get into that slope, which right now comes around 1940s. And then this region here. This is your September high day reversal close. Nice pivot in price. And this would constitute, again, 2 equal legs off the high. So measured move for that drop puts you down to like 1911, 1890s. Again, first thing, we got to get through this slope, but something to take note of here. Also, momentum, not quite with the drawdown that we'd like to see, right? So we're still above 30 there, a little bit below 40. This is going to be the lowest momentum read that we've gotten so far if we close at this level since the lows here in November. But certainly looking for whether we get continuation on this breakdown. And I just don't like how it kind of faked out here a little bit, but here's what it looks like on the intraday chart, guys. It's pretty clean still. So momentum, again, hasn't been the most convincing. I would have liked this break to be a lot more accelerated, right? If we are going to see a legitimate break of that key threshold. So watch the US session today. Again, if we close Europe back above this level, so 11-12 here in New York, I'd be of the mindset that we got a little bit more of a recovery before the spill lower, okay? As if resistance holds into 120, 120.12 into the US Open, you're right on the way, on pace rather, for that 1930s, 1940s level confluence region. And again, real nice zone into 1900. Any questions on Euro? If you're not already holding a short, it is not a trade to jump into from here. If you're holding a short from anything northbound of 121.50s, okay, I'd definitely be at a break-even stop or better. And if you're looking for new positionings, there's really nothing to do on the long side here. I wouldn't tempt it. If we did get a recoil and a failure either at the slope or at the Jan lows, might be an opportunity for re-entry for that move lower here. But be careful heading into the end of the week. It's still the first couple of days of February trade, guys. We're just putting in the monthly opening ranges with major key event risk on tap tomorrow. So if you are flat on this, don't worry, don't get FOMO and start jumping in here. We want to fear of missing out. For those of you who might not know that one, we just want to stay with some powder dry here as we get into the close of the week and NFPs. That's number 2. So let's discuss dollar yen. It's interesting. I've only taken a couple of positions this week, and dollar yen is it's interesting that I chose to operate in the abomination, but I think it was a level that was worth a shot. It was a tight stop, but here's what we were looking at. So 100 off the low, 2 equal legs off the low of this year, really the low that we made right into the open of 2021 gives you 105.13. Now in a weekly chart, it doesn't come out to be such a major critical level, and it doesn't really manifest itself until you get into the near-term charts. But here's what it looks like on the weekly. Obviously, a breakout. No one's arguing that. The first level contention was 105.13. That's what we were looking to trade off of. If this continues and we close back above, the next key level isn't until 106, 106.24. So 38.2, the drop from last year's March decline. It's the post-COVID drop. And the 1618 of the decline, of the ascent rather, off the low, 1, 2, 3. So want to see it close above 105.13 to keep the focus higher, specifically on a weekly close basis would be helpful. And dollar yen might look like it has a little more steam under its belt. Here's dollar yen on the daily chart. Now, this move marks now is going to be 1, 2, 3, 4, 5, 6, 7. I think this is going to be the 7th or 8th consecutive daily advance. As you can see, prior to this candle, the last 3 days, we really were trying. I got a short, literally, guys, off 105.11. Like, it was a really good entry. So the stop was real tight. It spent 2 days there, failing, unable to push through that. Momentum was pressing 70. It was worth a counter trend trade. Didn't work out too well. Here's the breakout, pushing higher. Your high day close from November is 105.42. The November high is 105.67. Key resistance, straddling that 106 handle. Okay. Now for this one, weekly open support is the same essentially as the December highs. And that's why I have that as a shaded region here of critical support. That's really in your near-term bullish inval at this point. So 104.50 into 104.75. Again, the February objective monthly open, the objective December highs, still the 618 of the drop from that November high. And we're still in that range right now. So we'll continue to watch this zone of key support. Here's what it looks like on the daily chart or on the intraday. So for here, by my part, if this is a legit breakout, and again, the justification for trying to press that short, here's where we got it against this region, is this confluence zone. That's the 786 of the November drop. It's the 100 off the low. It's uptrend resistance. If this breakout is legit, we should be looking a lot higher. Remember, a breach of uptrend resistance oftentimes can be the sharpest part of the rally. So all things held constant, near-term support 105.13, 105 still. Key support, weekly open, right? Monthly open. You got that slope in there, 75% line. Anything below 104.40s, and essentially you're looking for the resumptive move or crack lower here in dollar yen. So still looks good. Love the upside in general. The counter trend, little trade we tried, didn't work so well. We're sticking with the euro. And yeah, let's see if we can't get some legs here on dollar yen for that push higher. All right, that is number 3. Number 4, I'm sure, I think someone in here was asking about dollar Swiss in the webinars, and here's the setup that we put together. I mean, man, what a ripper. Very similar to where we are in dollar yen, in that essentially it was a hard press higher coming into some interesting levels. And the first level for me was the 90 handle, essentially 89.98. That's the low that we made back here in August. And former channel resistance. Here we are playing through on the weekly chart. Watch the close here. Key resistance right back at that 90, 90, 90, 80 level. We talked about that thing for literally like 5 months. That's now critical resistance here in dollar Swiss. Near-term support, or weekly support, I should say, bullish invalidation at the monthly, January and 2021 objective yearly open. That's 88.25. Here's what it looks like on the daily chart. Okay, so here's your yearly open. Funny enough, the January opening range never gave out till the first day of February. And here's your January open. You set a low, you set a high in the first 11 days of trade. We sat in that range all the way till the close. January opening range gives out, gives you an upside bias, clear cut. Here's the first level of contention, again, that we were looking at was that 90 handle. And I wanted to see if there was going to be a play there. Good thing we didn't try to press that one as well. Here's the pop through. I really don't have anything of note on the daily charts again until 90, 90, 90, 80. Here's what the intraday looks like. So the course of the advance near term has taken a very nice pitchfork. I'm going to tell you right now, this is a little bit of a poetic license here with this pitchfork, not really anchored on the swing here with a major level, but just using the slope. So it's a copy of basic slope support off the low there. And if you copy that gradient, boy, it's been pretty damn clean. Here's a median line break, median line support, 75% parallel resistance, resistance, breakout. The parallel comes in around 90.50, right? And then again, above that, it's 90, 90, 90, 80. Near-term support, the median line comes in at not yesterday's low, but the low before that on the 2nd. So like basically right at 89.80s, 89.70s. With bullish invalidation, again, with those swing highs that we made back in December. So another trade, steady as she goes, right? You don't want to try to fight these and get cute on it just yet. Everything looks pretty steady as she goes. Again, right into the upper parallels. The breakouts in dollar yen should be continuation. Okay, so that was last night's update. Previous to that, and again, here was that update from last night. There's the breakout heading into resistance, right? Heading into resistance. So no change to any of those levels. And again, a quick recap on dollar yen. Here's the breakout that we're talking about here. Watch out for that ripper. Here is gold. So quick run through gold. I've gone over this with you guys this week a couple times already, so it's going to take a quick run. As far as the gold trade's concerned, it's pretty darn clean. The first level is coming up right here at 1806. We're not quite there yet, but getting close. It's 618 of the rally from that late November low. Here we are. Okay, we already tapped this and bounced off it. So I'm looking for a more assertive play here. Remember, if we keep this lower, guys, everything held constant, still looking down below 1800. Okay, that's all I'll say on the daily chart. So or on the weekly chart, here's the daily. And again, why? I want to curb all expectations on the short side here because you're coming into a big region where we really do need to see inflection. So here's a zoom out. Okay, this is the daily chart. Guys, this is the same exact pitchfork we were following all last year, literally since March. We got the breakout. There's a little bit of a mess there, consolidation above the upper parallel. Once that broke, right back into play. Right back into play. A little messy there. Here we are at slope support. Here we are at downslope support. Here we are at the 100 off the high, 2012 objective highs. So big zone. Big zone. I want to see what happens here. Here's what it looks like. So everything between 1790 and 1803, guys, use caution. Look for definitive inflection in price there. We need a close below if gold is going to continue on this sell-off since the start of the year. So here's what it looks like on the intraday charts. And again, just uncanny, guys, how these charts continue to play out. Here's what it looked like last night. Or this was back on the 2nd. So we said, watch, look, 1803, that's your first level. You're looking resistance at 1848. You're bearish while you're in this formation. The rally didn't make it quite into 1848, 1845, failed. Here's the break. Here's that confluence zone we talked about near 1810. Okay, so we're there now. Key support is just lower. Okay, and over the next day into the close of the week, it's going to converge on this downslope we've been following just off the highs from Jan. Or not Jan, that late January high, the one that we made last week too. So looking for inflection here, 1790 into 1803 is the name of the game for gold. I do want to see some sort of inflection point there. Below it, you're continuing on a steady pace down to 1763 would be the first initial level. You got the lows there from November as well. We'll have to reassess that. The 100 again, 1749 or 1739. Any questions? So on all of these trades, guys, which are heading into the extreme levels for a trend, right? Testing trend resistance or testing trend support. Watch today's close. Gold's a little bit different because it's not testing a break like dollar yen is, a break like dollar Swiss is, but it is testing a major key inflection point, a pivot point in price, and that is 1790, 1803. Look for reaction there today. Okay, that is number 5. So no change to any of the gold levels. Still on place, clear moves throughout that pitchfork. Here's crude. So I put out a weekly chart on this on Daily FX yesterday. I gave you guys an update on this earlier in the week as well. The focus is on this breakout. So let's just take a top-down approach again from the weekly charts. Here's CL or US oil rather. And the major play I wanted to talk about here was the breakout above 50.58, right? Real nice moves. The comeback or the pullback tested former slope resistance as support that held. Here's the next leg up. What I told everyone on Daily FX yesterday was watch for this slope, basic slope resistance. Now, I always give you guys the heads up that 2 points is always speculative. Any trend line you draw that has 2 reference points and no other touches, it's just a speculative reference. Once you get that third test, that's the tell, right? So I want to see what's going to happen here today. And if we're going to get some sort of inflection, this is going to be a level we're looking for. Next leg up, nothing until 59, 16, 60, 66. But certainly near term, look for something here. Now, if we were to materially close above that slope, guys, and we were to get a 70 close, a close at 72 or above in momentum, certainly bodes well for continuation higher. Here's the last time it happened, right? So want to see a reaction here. Broadly speaking, guys, we are constructive crude. We've been saying that since the start of the year, and nothing's changed on that front, especially the new policy changes are coming out of the new administration. Certainly should be a tailwind for crude prices. Not good for us on gas, but certainly for price, those are the implications. Here's what it looks like on the daily chart. So within the confines of this ascent, here's the pitchfork we've been following. Pretty clean, support, resistance all along that line, even on the pivot. Here's the break, right? Again, if this gives way, there ain't nothing on tap till 60, okay? 60, 66, 100, 1618, 618 off the low. That's the 2018 objective yearly open, major pivot in price. converges on the upper parallel, basically. Not even to next week, a little bit further out even. Here's what it looks like on the intraday. And again, one other thing, daily momentum is deep and overbought. Now you're getting some divergence with the last 3 reference points on that, which is sort of a cautionary tale. But certainly while in this region, the momentum's still in the favor of the bulls. We need to see that break below 70 to start to refute that signal. Here's the 240. I'm gonna zoom out a little bit just to give some clarity on this. This is the pitchfork again that we were following on the daily chart, just to show you, where exactly in price this is. So again, a longer term play, not necessarily intraday or intra-week trade for this one, but looking for inflection off this 56 handle topside breach. There's another $4 run. You know what I mean? In gold, in crude prices. Weekly open support 52.16, bullish inval still 49.30. Questions on crude? Okay, number 7, peso. Keeping a good pace here. Here's peso. Let me take you this one on the further out chart first. So no change to the crude levels. We're trading right here. We're stuck there. Look for inflection today. Here's what peso looked like earlier in the week. So from the weekly standpoint, I guess I should just go over this really quick. I haven't shown you the weekly chart in a moment. It's on the report, but here's the weekly chart. Nice divergence into the low. The December 2017 high week close were what we were looking at for initial support. Key support at that 88.6. Here's the drift. Here's the turn. And here's the first test of resistance right at the high day close, the high week close from 2018. Is this a bigger base? Is this a bigger base? Well, if it is, again, it's not going to help you from here, but any pullback should hold 1964. Here's the daily chart. And this is why I'm a little bit more hesitant. So if we work with the confines of this pitchfork, which we've been tracking since June and September, it's not the cleanest, but what's this? If this is failure to break the upper parallel below the monthly open, which is the monthly opening range highs, which is again 2065 on the upside, you're not out of the woods yet. You can't mark breakout. Now look, objectively, this move we made on January 27th looked to me like a breach of the January opening range. Didn't get much, right? And then we pulled back and closed within that range, and here we are again. So I'm wondering if there's merit to sticking with that bias. Long story short, you need to clear 2065 on the upside on a closed basis to get the validation for a breakout of this formation. Here's what it looks like on the intraday chart. So again, we were working with this real near-term slope off the high. I was hoping to see this resistance hold for a drawdown into 1949. I thought that was a better region to try to play a larger bounce. Didn't quite get it, right? So here's the breakout. There's no trade here for me, guys, just as a disclaimer. There's no trade for me here yet. It's either the breach above 2065 on the upside to get the thing going, or if you do close below 1770s, 7730s right here, you would start to risk resumption of the broader downtrend. Now, with the dollar strength that we're seeing, that's not really our base case scenario. Base case scenario is that drawdowns do get capped by 1990s, and we need that topside break above 2065 to get it going. Haven't taken any positions on this as a disclaimer, haven't really even tempted an entry, but certainly something we're tracking over the next few days specifically. And that was the last update from the second. Here was the scalp. So that held. We popped through that. Let's see if that pop through gives you any run, at least towards the upper parallel here. Okay. Last 5 setups here. So let's hit Aussie. Looked like this earlier in the week. Certainly tempting some major turns in price. Our focus was on a close below 65.35. We eventually did get that close. Here was what it looked like on the intraday chart as we were just opening up the week. We wanted to see a 75.90 close to get the downside going. So, it's just been a snooze fest here in Aussie. Every time you start to get something that looks like a move, sucks right back. Here we go. Looks like a move, right back. look, pistol to my head, I still want to see 75.21. At the end of the day, I've dropped my bullish inval to 76.75. So if it gets through that, I don't want any part of this. You could probably see a rally back towards 77.50s or so, that slope, right? It's just not the cleanest setup for me right now. So I'm not really going to get too entangled in trying to call this one. All things held constant, we're looking at the daily chart suggesting that, all right, well, if this is a break of the January opening range, which is still holding below the January opening range lows, by the way, if this is a break of the median line, which has been in play for months and months and months, then yeah, we should see it drop into the 75 handle, 75.20. Nice confluence region there. 38.2 advance off the November low, 1618 off the high, right? 25% parallel. There's a lot there. We just need this thing to start to pick up some momentum. For the last 2 days, I've been looking at this and just scratching my head. Flatlining momentum, right? Even on the daily chart, momentum right around 50. So no Momo here in Aussie, but hopefully we can get some sort of trigger here, whether it's NFPs or whether we do get a monetary policy statement from the RBA tomorrow. I'm not expecting, or tonight rather, in US trade. I don't know if that'll kick it, but certainly we need something to give this thing a jargon here because we're just stuck. We're just stuck. Again, gun to my head, all things held constant, I'd be looking for a exhaustion high ahead of this zone for a final drawdown near 75.20s. So that's Aussie. Wish I had a bit more conviction for you guys on that one. I typically love trading Aussie. Here's number 9, Kiwi. In my opinion, actually looking a bit cleaner. Now, the back and forth price action doesn't help anyone, but certainly at least the formation seem to be holding. Here's Kiwi on the daily chart, okay? And here's what Kiwi looked like earlier in the week. The focus has been this key support zone, which was key resistance last year, the breakout, failing just ahead of the 1618, and here we've been in this consolidated range ever since the start of the year. Higher lows, lower highs. Don't do anything till this breaks. Period. End of conversation. Exclamation point. Okay. I think this will give us the more definitive break and the more definitive price play than Aussie at this point, just because of the whole yearly range has continued to consolidate. And obviously the divergence that we marked all into that high, higher high in price, higher high in price, higher high in price, lower high in the oscillator, lower high in the oscillator, lower high in the oscillator. And we've been in a consolidation ever since. Look for that break. Topside breach would be 73.30. Downside break, there's nothing until 70. Okay. Again, here's what it looks like on the intraday chart, a little bit more of a near-term play. If we do break the downside of 71, specifically 70.90, keep your eye on this slope. 70.50 and 70.30s would be initial downside targets to look for. There's the 70 handle. A nice pivot. And again, it's one of those trades I'm stalking very closely. I was very close to doing something here yesterday. I didn't. But, beautiful play. This was my ideal scenario. I had a marker there. I think I had it there on the report. Yes, I had a marker right there early in the week saying, you know what, if we get 72.30 level, that's something I might want to test, right? 618 of the drop, slope resistance. Was that just a raised ceiling? We didn't quite make it? Possibly. You even had some divergence here on the momentum oscillator that would put you in. So look, all things held constant, sub 72.30, that's what we're looking for. Need a break below 70, 70.90, 71, 70.90 into 71 to get this thing going. Getting a little excited here, guys, towards the end of the week. Okay, so no change to the Kiwi levels. Now, SPX. Well, we called that support zone earlier in the week, if you guys recall, the previous update on the 31st, right into the Sunday open. The first thing we said was watch this zone. Huge zone. You have the January low, so it's the yearly opening range, it's the monthly opening range, it's 100 off the high. So if this is just corrective, that's where you want to see hold support. Bullish or bearish rather, invalidation at 37.84. Following day, we ripped right off that region, ripped right into 37.84, and we said, hey, if this breaks out, you're looking higher, right? You're looking for that continuation right back towards that 1618. Not only did we make that, we even broke that 1618, and we're sitting right above it right now. The only thing I'm looking at is the high day close for the year, and that's 38.55. We haven't quite tagged it yet. So I just wanted to leave this on you guys, just leave this on to show you how this panned out. So even when these really near-term short slopes fail, right, they didn't last too long. It gave us perfect support and it gave us perfect resistance, because on the breakout, it was an accelerated move, and that's the conviction you look for your analysis. So we're going to go ahead and drop this at this point. I'm looking for a new slope to materialize, hopefully, in the next coming days. But man, all things held constant, this is a pretty big rebound. If we get through the high day close for the year, you're looking back at slope, which is above the yearly highs, just above. And you'd have to sort of just go basically only on gradients beyond that. So interesting play for sure here in SPX. Caution and looking for inflection off of 38.55 in the days ahead. Okay, Sterling. Sterling. Big mover today. Obviously, the BOE was on tap earlier today. Look, I mean, I'm not going to get too deep in the fundies, but basically you got that same commentary they got from Mario Draghi all those years ago. And if inflation starts to rear its head or does not, come in line with our expectations or our forecast, we're standing ready to do anything. And obviously that standing ready to do anything is basically what the markets run with, right? So you're seeing a pop higher in Sterling today, but I just want to focus on this one chart. Okay, it's the weekly chart I've been showing you guys for the last couple of months. Now, damn things changed. The Brexit gap gives you 136.75. The 786 gives you 137.43 slope. This is a 5.6 point touch slope, all there, and we've been unable to make any progress on the upside into this region. Interestingly enough, one could make the argument that despite dollar strength, sterling has been rather resilient and keeps the underlying current weighted to the upside in sterling. Sure, I can see that argument. But at the end of the day, resistance is resistance. I'm not going to buy into this. And if it breaks, buying a breakout, where's your stop? So the only play here was to try to play the reversal pull. Again, just as a disclaimer, I didn't get into this one. I think there was a decent play on the downside before today's rip, but what do you do from here? Well, here's the tell, guys. We need to see a reaction. Here's your weekly, here's your objective weekly open, 37.05. If this is going to hold, I'm looking for some sort of downside formation to give this thing some character. Haven't seen anything compelling just yet. I was taking a gander at something like this as perhaps something that could play into the cards here in the days ahead. That was what we were looking at earlier in the week. So I don't have anything to add on here just yet. I want to see failure, ideally ahead of the weekly open, but anything above the stretch highs we've been making, guys. And again, like it's going to be a pretty radical breach. Monthly open resistance is right there. Like I said, weekly open resistance, monthly open resistance, right into the 37 handle. As it stands now, all things held constant, one thing you do want to note is that we are poised to mark an outside day reversal off of fresh monthly lows. Now, typically that would be constructive. Okay, that would be a bullish move. And specifically because there's a failure to close below the median line, I really want to see how today pans out. Again, my line in the sand is the monthly open, 37.11. I guess this is not quite on the right mark, but you get the picture. You get the picture. Again, a breach of upslope resistance, if it materializes, there's a lot of room. Questions on sterling? Last but not least, dollar CAD. We typically go into this one pretty with a lot of intent, but again, this week just kind of a snooze fest. You know what I mean? Kind of a snooze fest. Weekly opening range remains intact, right below slope resistance. Here's dollar CAD right now, and I'm just cleaning this up a little bit. Here's dollar CAD as it looked earlier in the week. Here's what it looked like in the Sunday Open. And ever since the Sunday Open, we said 27.30s, maybe 27. That's the max on any pullbacks. We want to see those two levels hold, areas of interest for entry for the pop higher. Remember, if this is a real break of a multi-month downslope resistance, should be looking for a breach higher. Now, ever since that breakout, what's happening? Lower high, lower high, lower high, lower high, higher low, consolidation. And this is something I was giving a presentation to the executive team on IG earlier in the week, and I was just telling them, coil, 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 coil. There's coils all over the place. Euro broke a coil to the downside. You got, hell, even Bitcoin was putting in a near-term coil. Swissy was putting in a near-term coil that broke higher. Here's dollar CAD putting in a near-term coil. So there's a lot of setups that are pending, a lot of things that are just poised for the break. We need the gasoline or the spark rather, whether that's NFPs, whether that's some sort of new presidential executive order, whatever it is, we just need something to get the market to make that spark. And I think in dollar CAD, if that does happen and dollar strength persists, 29.18, 29.75 are your top side levels to look for there. We need a break of that March trend line. 27 bullish inval. If you get back below there, you're probably risking a move right back for the resumptive trade into 25 and change. Any questions on dollar CAD? Here's the weekly chart. This is just the onset, which is why I'm saying we need to see something here. If this is just the onset of the larger recovery, man, we can start picking up the pace here. Okay, well, guys, if there are no other questions, that's everything I've got. I want to wish you guys the best of luck into the close of the week. Non-farm payrolls and CAD employment comes out, again, tomorrow at 8:30 Eastern. CAD employment is expected to be pretty messy already. So another one that may offer some decent plays here on dollar CAD, specifically because we are in this coil, okay? And a clear-cut break of the weekly opening range should give us a play here once and if that happens. All right, guys, best of luck. Have a great weekend. Many thanks to you, Jay, Steve, Pete, everyone in the room. I will see you guys on Monday for the free session, on Tuesday right back here on SB, and on Wednesday for that new IG session, guys. It's going to be a joint session. I want to tell you ahead of time. It's going to be a joint session. This is an IG idea, and they want to do a platform walkthrough on the back of the webinar. So I'm only going to have a good half hour, 45 minutes on that Wednesday webinar. Look on my Twitter handle and keep your eyes on IG. The link for the registration on that one should be coming out either today or tomorrow. And I will keep you guys updated and see you on Monday, as always, for the free session on Daily FX and right back here on SB. Have a great weekend, guys. Cheers.